Please welcome John Morlan from Smarter Risk. Hey, John.
Thanks, Evie. Thanks for having me.
Great to have you here. And so let's jump to the rabbit hole and start from the beginning. Please tell us a bit about yourself and your background, and let's start.
Yeah, so I can give you the quick 2-minute overview of, I guess we can zip through John's life. So I started out my career with Mutual of Omaha, so LA&H, did sales for a couple years, then moved on and did commercial sales. Was at the time not a very good salesman. Let's just put it where it's at. But then I was introduced to risk control, and I thought, wow, this is kind of interesting. I think I might want to do that. So I harassed a guy named Walt Bowden at ISO for 3 years, and he gave me a job with ISO. So for those of you, your audience is probably familiar. They're now Verisk. They're the largest servicer of the P&C insurance industry in the country. And I was very fortunate. I was put into their mentorship program. Back then, they did a 5-year mentorship program. So it's pretty great. Yeah. And my mentor was Bruce Simon, fantastic guy. And he'd been in the field for almost 40 years. So I was with ISO for 5 years. We worked for all the major carriers, primarily focused on small middle market accounts. And we did assessments for workers' comp, property liability, fleet, inland marine, you name it. We probably did it. And then I spent 7 years on my own, again, working for a lot of major carriers. And then I spent several years working directly with businesses, helping them implement safety and risk control programs. And all those years of doing it, I always thought, wow, this is really complicated. It takes forever and it's really slow. Like, why don't we have an app for this? Why hasn't somebody figured this one out? And so I actually tried to put the app together back in 2012. I had a couple developers working on it, and that project fell apart.
Wait, before we jump in to the app, just a second. Let's clarify for the audience what is risk control and what is meant to be a risk controller.
Oh, okay. So risk control has two really primary purposes. So once a carrier typically binds coverage, they'll send out risk control to do a risk assessment. And there's two purposes. One, pricing purposes, right? They want to figure out what the premium should be based on the risk. The other is they would like us to help the insureds or recommend changes so they can avoid claims, right? So we want to be able to control that risk. And so that's really what risk control is used for. It's primarily used by insurance companies. Currently, there's a really tiny market for agencies and SMBs, but we hope to change that.
So the risk controller is belong to the risk carrier. For the insurance carrier, right?
Historically, that's the way it's been done, and it's had these conversations all the time. But historically, because something's been done a certain way for so long, people just accept it as the norm. And what I'm always saying is risk control has always been deployed practically, never optimally. And the reason why is risk control is expensive, right? So an insurance company doesn't want to spend the money on risk control. They spend a little over $11 billion a year with a B. And they don't want to deploy risk control until they have a signed contract. Okay, we've done a quote, we've bound coverage, now we'll pay for that. Not the optimal way to do it, but the practical way. And same with agencies. Agencies typically don't deploy risk control early because of the cost and because of the time. It's like typical turnaround time of a risk control or a risk assessment is about 3 to 6 weeks. So yeah, it's pretty crazy, isn't it? It's 2024 and it still takes 3 to 6 weeks to get this done.
So just to clarify, after 3 to 6 weeks, you got the report, the risk report. What happened there? In the case that the report is it's a red report, okay, like it's like it's a big no business from a risk point of view. What happens there?
Yeah, so that's when it gets interesting. So once you have the risk assessment done, the carrier can do a few things. Number one, they could rate it up, they could cancel it, or they could ask an insured, hey, of these 17 recommendations, these 3 are mandatory. Will you comply with those immediately? And so then it's kind of a negotiation period at that point, which is really nerve-wracking, particularly for agencies, because they've spent all this time and effort, 6 months trying to get a deal done. got a quote, they've got it bound, and now risk control goes in and the whole deal might get blown up. So, and then all that time has just been wasted on their account. So it's really, really frustrating for agencies. And then the insurers are frustrated too, because when you send risk control out, they don't know what they're looking for. You know, I was in the field 13 years, and I can't tell you how many times people were noticeably nervous when I would arrive, and I would always have to put them at ease. Like, hey, this isn't an IRS audit. It's going to be okay. We're just here to figure out what your risk is and what we can do to improve it. You know, so you had to put them at ease. But yeah, so and that's kind of the way it's been for 100 years, right? Risk control has existed this way, not again because it's optimal, but just because this was the practical way of doing it.
So, okay, after I especially want to double click on that because this is very important to the rest of the conversation. So after the insured came to the agent and say yes to the policy, okay, to the policy terms, then the risk manager, no, sorry, the risk controller go to the field and explore the business, right?
Eventually, yes, that's
Eventually,
what happens.
yes, yeah. So the insured himself have insurance, have coverage for 3 to 6 weeks, okay? And after that, maybe or maybe not, the risk control can say you don't have any coverage from that point. Of course, depend of what the carrier said and what you mentioned, right? Till then,
Right,
yes.
right. You've
So
got the basic timeline.
yeah, so it could be erased from the portfolio agent. It could be erased, of course, from the portfolio insurance carrier. And so it's a lot depends on you as a risk control.
A lot depends on risk control. That's true. But more of it depends on how the carrier wants to approach it, right? So the carrier's got some options. Like I said, they could either say we're still willing to cover you, but the price is going to be X, whatever that is, right? Or they could negotiate some of the recommendations to be completed so that they can reduce their risk, and then they would be an acceptable risk to the carrier. So right, but it does just depend on what the situation is.
Okay, so it's great what you said. Okay, so the carrier know from the beginning of, okay, before even you go to visit the business or the insured himself, you know in what cases he will get or it will say yes to the business, okay? You know it beforehand. So in pink world, in the pink glasses, it's like it can tell you before even you enter the business to his portfolio, it can say, okay, you need 1, 2, 3 to accomplish, and you will be insured to the 12 months ahead, and not just after the risk control come to the picture. And if you will have that input beforehand, you will be a better, we can say a better agent or a better portfolio for the carriers, right?
That's right. So yeah, ideally, optimally, you would improve the risk before you even submit the application, right?
Okay, so you're going to deal with the confusion that you have in the process, because why you didn't tell me that before you send the risk control? Why you didn't tell me that before we have the insured in the picture, and so on? So
right.
You have confusion here. You have time consuming. 3 to 6 months to 6 weeks is a lot, okay? And it's, of course, it's uneconomical here with all the process.
Mm-hmm.
Right, so you
Yeah,
have yeah, go ahead.
it's the crazy world of insurance, right? So even the carrier takes on, so once they receive the application, they quote it and bind it. They only have so much information on the application. So they're going on what little information they already know about this risk prior to. But there are some states, and this is where it gets really kind of crazy, that the carrier only has 30 days to cancel the policy. If not, they're stuck with it for an entire year. That's not every state, but there are a lot of states out there that do that. So, but even put that to the side for a second, during the time period from binding to getting the risk assessment back, the risk report, and being able to view it, right, as an underwriter, there's all that unknown risk that's taken place for the carrier. And two, it puts everyone else in limbo. So the agent doesn't really know what's going on. The insured doesn't know what's going on. So it's really not a great way to deploy risk control, but it's the way it's always been done. So
Okay, I think right now is the moment. What is the problem Smarter Risk is trying to solve? So you develop Smarter Risk,
right.
maybe just to give a couple of the beginning of Smarter Risk, and we will jump in the problem that I think the audience is already know what is the problem, but let's
Well,
clarify it for all.
well, it depends on who we're talking about, right? So
Great.
there are three key stakeholders in the small commercial insurance or the small commercial insurance transaction. So you've got the underwriter, or the insurance company, you have the agent, and you have the small business owner. For the insurance company, they would love to do more risk control, but there's a big problem. It's really expensive. It's not cheap to do. They'd love to do more risk control because by doing that, they can reduce their risk exposure and lower their claims. So that's positive. On the flip side, this is where it becomes kind of this balancing act. If they don't do enough risk control, then their claims can get out of hand, their loss ratios can get too high, right? So it's this push and pull between the loss ratio and expense ratio. How we solve that problem is by driving down the unit price of risk control. So unit being one risk assessment, right, as a unit. We reduce the price by up to 80%. So quite substantial. And we also improve the speed of which these risk assessments are done by about 90%. And how we do that is we automate a lot of the processes. The risk assessment is completed by
So
non-professionals. So go ahead.
sorry to interrupt you because
No,
it's
you're fine.
fascinating. So the 90%, just clarify from the 6 weeks is to
Say that one more time.
and 90%
Mm-hmm.
is like take it from the 6 months, 6 weeks is like in a day.
Technically, it can be less than that, but yes, it takes approximately 30 seconds for an insurance company or agency to order. So to set an insured up with a risk assessment, it takes the insured 7 to 15 minutes to complete. As soon as it's complete, that's what we call a risk profile. Risk profile is generated. From that, we instantly generate a risk improvement plan, so recommendations for the insured, so they know exactly what they need to do to improve their risk. We also instantly generate a risk report with a score. It takes about 30 seconds for an email to go out to the party who ordered it, and they have instant access to that report and that score. Now, I did this for years in the field. It took me about 5 hours to do that. A business owner with no training can do it in less than 15 minutes.
And you said you have three stakeholders. So one, the stakeholders you already mentioned is the underwriter. The
The insurance
second
carrier.
is the agent.
That's right.
So what is the part of the agent here? Because you just send the report or sorry the app to the end user, to the SMB
Mhm.
owner, right?
That's
And
right. They get a
then
link in their email.
so it's like a white label you provide, or it's
No, it all goes through Smarter Risk. They partner with us to provide the service. We don't have a white label service as of yet.
okay.
So
Okay, so the agent is after the okay, let's after the carrier gets your link, he send it to the agent, and the agent send it to the SMB owner, and the SMB owner fill the form and answer all the questions, and then he send it back to the carrier, to the
no,
underwriter.
you almost have it. You're close.
Oh,
So
yet.
so if an insurance partner, an insurance provider orders it, it goes directly from them to their insured. Their insured or small business owner or policyholder clicks on the link. They go through the workflow. They complete the assessment. As soon as the assessment's completed, the insured or small business owner can view the report. They can see their score and they get a risk improvement plan. And the carrier gets the same nearly instantly. Now, if an agency orders it, it's the same process. The agency says, we would really like to work with this insured, and part of our value proposition is we provide risk control. They can basically provide an entire risk control department using our app. They send a link, their insured or client receives it, they click on it, and they go through that same workflow. At the end of it, the agency receives the report.
You said something in our pre-chat, but also on the website. It's like, let's talk about the ARC. Okay, like automated risk control.
Mm-hmm.
And you know what? Let's explain it what it means. Because I said, okay, the insured himself fill the form, fill all the report, and then send it to the carrier. We got it. But what you have, except from probably a beautiful form that the insured himself fill in.
Right. So it's a dynamic form.
Okay.
So it only asks questions that are relevant to the risk profile. So for example, if the user says we don't have a welding exposure, it doesn't ask them any of those questions, or we don't have a commercial cooking exposure. Now we don't ask it that way. We ask it in a little slightly different way, but so it's really smart, and that gives us the speed. But then everything else beyond that's completely automated. The risk improvement plan is automatically generated, so is the report and the score. And we can even automate the development of safety and risk control programs. We've got up to 25 policies we can produce just using their risk profile. It takes about 30 seconds for a business owner to do that instead of them spending 6 months trying to figure it out. So I always say the easiest way to explain this is Smarter Risk is an insurtech platform for assessing and improving insurable risk. And what kind of insurable risk are we talking about? Workers' comp, property liability, fleet, and contractors liability. Currently, we do have several other coverages on the roadmap or assessments on the roadmap.
Okay, so just what you said earlier, the underwriter is explain or is wrote what kind of exposure the insured will be in, and then the form will adjust by what the underwriter said, or this is typically that the automated risk consult will say, okay, if it's a restaurant, I know that it will expose to 1 to 3 risks. Yeah. So
yeah, it's all dynamic. So even within that, when they answer a question and they go through and they answer other questions, those are dynamic too. So depending on how they answer certain questions, it'll either produce additional questions or skip to the next section, but it knows what to do. Another great example is if you say you don't have a sprinkler system, it's not going to ask you anything as far as property goes about your sprinkler system. It'll just skip over all those questions. Or if you say you do, it'll add a bunch of questions like, when last time was it serviced? Things like that, questions like that.
maybe it's an advocate questions, but devil advocate question. We can see a lot of insurtech form like Next Insurance, etc., that they already ask that kind of question, like, do you have sprinklers? Do you have smoke detectors? So what your differentiation between those guys?
Yeah. So for the most part, anything for our system for risk assessment purposes, we don't ask them anything informational. For example, what's your square footage of your building? We don't ask them that, right? We only ask questions in which we can generate actionable action items, right? Recommendations. So yeah, it's not like an application like for insurance. It's different from that. Their application, none that I know of, exist that automatically generate recommendations, a score, and a report. So we actually have a feedback mechanism that we can give to the insureds, the small business owners. So for a lot of those applications, they're not very sophisticated decision trees. They're not dynamic, so they'll ask a lot of questions where you have to constantly click an A. Then when you get to it, you don't get any information back, right? You don't get any feedback. With our application, as soon as you submit the assessment, we generate that risk improvement plan, and now the insurer knows exactly what they need to do to improve their insurable risk.
Okay, got you. So if the insured himself have any question during the process, do you have any chatbot, any kind of assistant?
No, currently we don't. And the reason why is when we put this in beta, we spent 2 years building it. Then we went out and we field tested it. So to make sure business owners could understand it, the idea was that they would never have to have any help. Now, with that said, we have now built in tooltips. So if they're curious about something, would like some additional information, there's what we call a tooltip on the side. They can click on it. It'll display either
Nice.
text or a picture and give them additional guidance. And we will very soon be rolling out live support where they'll be able to message with a risk control consultant.
Okay. Why the agent? You know what? I asked you that question. Okay, so I got that carrier will get you on board. Okay, so I guess the carrier need to have a chat with you after. I hope they will hear that episode. But even the agent have interest here to get you on board with their process, with their applications. Because we know that there is a lot of insurance agents, especially independent insurance agents, that are looking for tech solution for their agency. So I think
absolutely.
I think there are also a great stakeholder for you, because it's not only if I work with X carrier, if I work with Y, C, and Z carrier, I want to provide them the fastest way to provide them what kind of risk they're exposed to.
Mm-hmm. Yeah, the agents we talk to, and we talk to a lot of agencies.
Okay.
They like the application from the perspective of having a competitive advantage. So for a lot of the jumbo agencies, they provide risk control. It's a great expense, but it's typically provided to the insureds who are paying higher premiums. So say 50,000 or above, they're going to get access to risk control, but there's a great expense to it. These smaller agencies don't have access. They don't have a risk control department. So that's where we come in. They can provide an application that is inexpensive and is basically a turnkey solution for their clients.
Okay, so what are your long-term goals for Smarter Risk? Where do you see the company and its technology, especially generative AI, include in the next 5 to 10 years?
Oh, wow. The next 5 to 10? I'm
The
trying to
next
concentrate on this 24 months.
the next year.
Maybe the next year. I mean, since we launched and we're on like the 3rd iteration of the app, we just keep improving it over time. So my guess is that we're going to be far advanced from where we are now. And as a company, we would like to take on some real market share. We'll see how it shakes out. We have a huge advantage, I think, in the market, our speed, and we also have our cost structure is just so much lower. And then that's why people love SaaS, right? SaaS businesses have great margins. It's because of all the efficiencies. And so that's the way we've designed it. So for our company, like I need 2 engineers and an app. That's it. Most risk control vendors, they need hundreds of consultants and employees. Not even close. So we think there's a huge advantage in the market. Now, there's obviously some advantages to having a human do it. So there's some trade-offs there, but we think the speed and the price in which we can perform risk control makes it pretty compelling.
All the process is 100% machine?
Basically, except for the user input, yeah. There's no human input anywhere else.
Nice.
It's not, including billing. Everything is done instantly through the system. Yeah, there's no humans involved. We did it. I mean, we built the application so that you didn't need a risk control consultant, right? Now that doesn't mean that you can't use the application in combination with risk control. So I want to be careful about that, because many people think that you could just use the app. Now, if you don't have a loss control department now, yeah, you definitely need to be using our app. If you do have a loss control department, I just had a conversation with a regional carrier. They've got 45 in-house risk control consultants. They're in 20 states, primarily workers' comp, but they're in some other lines too. And they want to use the application to augment their staff. So say, for example, you've got the lower premium dollars, you could send our link and have the app do it, and then use that score to target those businesses based on their scoring, right? So now you can really optimize the staff that you do have. I mean, my guess is we don't have to study or anything, but using our app and kicking the process off as early as you can, and then being able to use the score to target businesses, you're probably talking a 50% increase in efficiency.
Okay, great.
Yeah, and that's when you put the humans back in, because I mean, if you think about it, it really kicks this process off a lot earlier. The insureds, the small businesses, get instant feedback, so they know what to be working on. Then the risk control consultant comes in, and think about how different the conversation is. This also, I think, changes the mentality. Instead of risk control going on and they're going in and they're like police, which like I said earlier, people get nervous, like, oh, it's an IRS audit or something. Instead, you change all that. The insured is now a lot more comfortable. They have gone through their own self-assessment. They understand their own risk a lot better than they did before. They have a risk improvement plan. They know exactly what they need to do. The risk control consultant then comes in and says, hey, let's look through your self-assessment. What are you struggling with? What can we help you with? It's a
Yeah,
different conversation, and it
absolutely.
changes the entire dynamic. And so I think we're going to have a lot of success with companies that have no risk control now, and I think we'll have just as much success with companies who do have risk control. So our risk control consultants in place now who
It's
want to use
great.
the combination of technology and humans.
But it's a great concept to change the dynamics between insurance and the insured. It's not just, it's not the IRS. It's just a risk control that want
But
to make your business is safe for you and the environment. Just it.
yeah, everyone wins in this situation.
Exactly.
So the insured, the small business owners have near as many claims. That helps loss ratios. That's good for their premiums. That's good for the insurance company's loss ratios, and it's great for the agent. How much service work is centered around answering phone calls because your client had a claim? Because who's the first person they call? They call the agent. Hey, my building just burned down. I need a claim. I need to make a claim. Right. So this is really does make it and this is why we talk about it on our website about we're building a platform that makes risk control a mutually beneficial and collaborative effort. We all should be working together on this, and I think that also helps the insurance company with our image right now. I don't know, did you catch the latest South Park clip? It's been floating around the internet. They
Not yet.
they go in and they try to file an insurance claim for a medical. It's a medical claim, and of course it gets denied instantly. It's really funny. But what's interesting about this is that's kind of the image we have, that, we're really difficult. The insurance industry as a whole is very difficult to work with, and we're not very transparent. You got to see it. It's really funny. Someone sent it
Okay.
to me. If you can't find it, I'll shoot you the YouTube link. But
Here,
yeah, and so I think it's
I
really
will
neat.
share it. I will share it with the audience on YouTube. Just
Oh, great.
yeah,
Yeah,
yeah. I found it right now.
it's pretty funny, but it's also kind of sad that we've gotten to the point where you know, this isn't so much humor, more like reality.
I, by the way, about cartoons and all that shows, I on Simpsons you have a lot of insurance joke, insurance Simpsons.
Oh, really?
Yeah, yeah, yeah. I just
Yeah. In a minute, he's going to call his supervisor, and before he even tells him what the claim is, he says, "Oh, I'm sorry, it's been denied." And then I think it's Cartman. He says, "Well, you haven't told him what the claim is yet." Like it was just like automatically denied.
with our medical day. Okay, great. I will
Yeah,
share
it's
it
pretty.
with the audience. Awesome. Um, so we're closing to we're near to the end. What emerging trends in the risk control and insurance technology landscape do you find most exciting or potentially disruptive, or you will see in the next, not years, but months? Because we have generative AI, all the buzz around, and there is a lot of buzz, but I know that there is a lot of essence here that is really go, who will be, using it will absolutely change the ecosystem. But how you find that in the risk control?
Well, I'm going to take a contrarian point of view, and I'll just say I love AI. I love ChatGPT. I mean, I've got the pro version. It's super cool. I mean, it's great what it does, but there's a but. AI is not useful for everything. There's a huge cost to AI right now, and it depends on what kind of product you want to build where AI makes sense. Let's go back not too far in the distant past and think about Uber. Uber didn't
Mhm.
use any AI. Uber actually didn't even use any technology that was like bleeding edge or groundbreaking. They put together existing technology, which was very inexpensive. They put it together in a unique way. And because of that, they were able to build the service off of that. Now, so I'm in that camp. I think that it depends on what you're trying to do. Is it the right hammer for the nail? Let's figure that out first. If it is, great, let's use it. Now, does it make economic sense? So for what Smarter Risk is doing, I do think there's an AI play. We've got a few things on the roadmap to use AI for very particular use cases. But in general, I think we need to be careful that AI is just this dream solution for everything. I don't think that it is. Now, one other thing I'd like to say is I do think if you're not using AI in your operations, you're crazy, because there's so many things you can do and that AI will do in the near future that can make your operations more efficient and reduce expenses. So I think AI is great. Like I said, it just depends on what you're trying to use it for. Depends on the application. And I'm not an AI expert, so take this with a grain of salt. This is just my own 2 cents, which it may not even be worth that much.
So as we need to the end, are there any final thoughts you would like to share with us?
Any what?
Any final thoughts that you would like to share with us?
What I guess one thing I would say is I do think there's this inertia for the status quo. And I think and this is what I found people willing to do things that they know are less efficient, more expensive, because it's what you've always known, right? And so what we've got to do is we've got to have two things. I think, particularly in the insurance industry, we need a generation of builders. We need to build stuff. We need to build solutions. We see a problem. We've been in the trenches for years. We probably could build a solution, right? So we need builders, and then we also need people that are in roles they can do this to take chances on young startup companies. We need that. We need them to take chances on companies from an investment perspective, from being a client, any of that, So I think that's really super important that we do that, because, I mean, change is going to happen to the insurance industry. We may go there kicking and screaming, but it's going to happen. And I'm excited about it. I think it's great. And I also think it helps us recruit young people, because they're like, wow, this is an exciting, vibrant
Exactly.
industry. I want to be part of that.
Exactly. The insurance companies need to take risk.
Yes. Now, calculated risk. I'm not saying we should, go crazy here,
Um,
but we should take some calculated risk.
and the youth will be like the youngest people will join and will see that the insurance world is not just a boring world as they think it is. I
Yeah,
totally agree with you.
yeah, we still have that reputation, so which we need to work hard to shed that and become a vibrant and growing industry that embraces change and technology.
John, I would like to thank you very much. I really enjoyed that, and
Thank
I'm
you.
looking forward to see what smarter risk will be in the next couple of months, not years.
Yeah. Me too. It's an exciting time.
Thank you very much.
Thank
Have a
you.
good one.
You too.